Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Review. Well, this could more than double your retirement income and possibly more than double or triple your retirement assets. See, with this 3-day drop that shaved over almost 1,100 points off the Dow, people are voicing concern after concern about the volatility, which I've been talking about on Hidden Wealth Radio now for several weeks, of the competition between bonds that are finally now, the 10-year Treasury now pushing 3%, competing with stocks because people being so fearful of the stock market, they're finding a flight to safety, which puts more pressure on the stock market, which is why we see these 1,000-point daily. February 8th, it lost over 1,000 points just in one day, but we've seen a consecutive 3-day drop of almost 1,100 points because money's leaving for safer ground. But that is not necessarily sacred safer ground when someone's looking to make 3% just at the risk of wanting to not lose 20, 30, 40% with whatever the market may give back. Folks, on top of that, many of you have asked about taxes, and we had a client that I just met with this week that had said, it's like you talked about on the radio, which I talked about on the radio, a client talking about their traditional advisor had said when asked about taxes, taxes are just part of the equation. Folks, unless you make them not part of the equation, they will be part of your equation. And she said, Chuck, it was the same thing I experienced. Most of all my money, like you talk about, I've saved in tax-deferred accounts, which are going to create a much bigger tax, especially when you hit 70.5. And then she was recognizing that by taking income from that account in retirement, it was now taxing up to 85% of her Social Security. And obviously taxes are a big part of the equation when you give back a couple $100 a month of Social Security that you've already paid taxes on, as well as give back several thousands of points back to the stock market when it does its thing, like it lost 50% twice between 2000 and 2002, and between 2007 and 2009. Folks, if you can get these two things right and in the right order, eliminate tax as your main focus for those of you that saved at least $200,000 or more towards retirement, and eliminate downside risk. Elimination of taxation, elimination of market volatility. And these two things will be the most volatile in our lifetime, with the number of baby boomers retiring daily at 10,000 and the federal government collecting fewer and fewer taxes. Taxes will head up and the market will continue to be more volatile with interest rates continuing to rise. Go to retirementprotected.com. That's retirementprotected.com, and let me teach you a complimentary log on and learn introduction to wealth creation and preservation. Money no longer losing to taxes or no longer at risk of losing to the market. You can have your money work harder for you. retirementprotected.com.